Wells only and his guests are not responsible for any losses you may accrue for having weak hands. Where the haters at? Y'all bitches still ain't showed up. And now, right, we got Hex, flawless uptime. People thought this was a joke. Now they're mad at the chart.
This is Wales only. Glad you guys can make it out. I'm making some claims that are pretty outlandish, but I can back them up. Boom. End of story. There is no other crypto out there, so don't get it twisted. If you don't understand where you're parking your money, you're gonna pay the consequences for that, and that's just how the cookie crumbles. Boom. We're obliterating everybody, literally. There is nobody else that comes close to what Hex has done. Boom. Oh, it's about to get funky. Funkier than you could have ever imagined. You know, Richard Hart is a boss. Hex is literally the best thing on the planet. It's simple mathematics. Right? The reality is that I want to be rich as fuck. There's only one way to be rich as fuck. That's by sitting on your ass the longest. Yep. That's it. Yep. That's the secret. The Godwell told you. Richard done told you. I done told you. Kareem done told you. Maddie done told you. Everybody done told you. Everybody done told you. Shit, motherfuckers still acting like they don't know. Appreciate that.
Yeah.
I appreciate that.
100% safe. There's plenty of games left.
Valiant done told you. Yo, everybody said it. I mean, hey, you know what it is, man? Everybody done told you. Y'all's deep. Everybody. My God. Hex Asians, bro. Everybody. Australians, man. Everybody gets me. Yo, when is it told you? Dollar Club told you. Everybody done told you. It's crazy. What's good, everybody? Hope everybody is having an outstanding day. We got another one on deck. It's been relatively weird for this time of year. In New York, it's particularly rainy, which is not really that normal for New York. But you guys, I'm sure, understand that if it's not going to snow, well, it's going to rain. And that's pretty much what's going down in New York this year. I was looking forward to some snow because, man, it really hasn't snowed here in a long time. It used to snow all the time here. But never mind that. Let's get to the few stories that are out there to get it out the way. Let's get this screen share popping. Just weird, right? Like, the first thing I want to talk about is this whole Apple smartwatch situation. I don't know if you guys are aware, but for whatever reason, somebody remembered about antitrust laws, and they decided to want to ban Apple from selling their smartwatch, I guess. And of course, Apple secures temporary reversal on smartwatch sales ban because, you know, who the fuck isn't selling a smartwatch? I just don't understand what the issue is. You know, it's like nobody's really doing any antitrust. You know, if you're going to break up or intervene in something, you know, Walmart's a good candidate. Google with their search business, you know, those are the obvious ones, right? People like Apple does not really dominate anything specifically. They have a huge fandom, but that's pretty much where it ends. They have a monopoly maybe on how they charge for the music that they acquire from artists. or something like that. But they don't have an actual monopoly per se. So I don't get this. Don't get this. I don't get that at all. Just weird. Just weird. Let's see what we got next here. 5 hours. Yeah, this is what I want to talk about anyway. Richmond Federal Reserve Manufacturing Survey slumps, shouts stagflation. Now look, I've been a proponent of stagflation since 2010. And in all reality, that's just when I begun to understood what the hell it was. That's what we've been living through probably our entire lives. And what is stagflation? Stagflation is low income growth, high cost of living growth. I mean, that's what it is. And that's what we all are familiar with. So, the intermediary variations, in my opinion, are relevant. So it's important to understand the context of this data and how the market receives it. And as you guys can see, the last two readings have been negative, severely negative, right? So, like we talked about before, the market's going to have to make some decisions, right? And right now, it looks like the S&P is hanging on for dear life. That's just what it looks like, right? You can't be swayed by something that hasn't necessarily materialized yet when it comes to markets, because that could change in the drop of a dime. Because again, we're watching for the dollar to find some support down here as well. And let me just go back to this chart here. So while the S&P looks like it's hanging on for dear life or whatever, it's imperative to understand the context within the chart is set up to look like this. Because, there could be a period in time where it looks like it's going to top out, right? And let's just hide the right side for a little bit, right? That looks like it was going to top out. And what happened? Bam. 200 more points is what happened, right? So it's understanding things like this about technical analysis is that is, what's imperative. Understanding positioning, understanding what the market is thinking, how the market is viewing a certain level versus another, crap like that. If you're just, the thing about market moves is like, you know, like today's been a really crap day, right? Like the market hasn't really done anything. It just really had one move, and if you missed it, the only move you're in is the recent move, right? So there's not much activity going. This is from 10:30, so this is like 9:30 over here. So there's not been a lot of activity today, right? So days like today, they're pointless to trade. You got to understand what you're doing if you are going to be out there, because you're just going to get chopped up, as you're seeing here. This is the day to play edges, literally, and nothing else. Because anything else, you're just going to shoot yourself in the foot. Because the market isn't really going to have follow through. People are they're chilling, they're relaxing, they don't have to trade. That's the whole point of being a trader, is not having to do shit. So that you don't want to do. So people are typically not trading on days like today. And that's why you don't really trade on days like today. So, yeah. But market's still moving elsewhere around the world. And if you look at crude, right, it's still chopping around. It was at 75 plus this morning. Now we're down to 73 and change. All right, so if we give this a 13-minute view, yesterday we went as high as 76. Overnight, we went as high as 75 and a half, 75.60, and we're $2 down, damn near from that level. So that's how quickly sentiment can change in a market that's really being tied down by a lot of narratives, even though fundamentals might look one way or another. And let's check what the Swiss franc is doing. And if you guys remember, this is a bad read for the market overall, right? So the fact that this continues to trend on higher and make new highs, not really positive, because this is capital flight. That's what this means. And then you have the gold trending up in line with that, with people literally dumping dollars, right? So we gotta see something turn at some point, basically, is where we're at. And we talked about the dollar last night, and this is all related to what the perception might be of the market today with respect to these couple of negative readings. Maybe we're at a point where, economically speaking, um, apparently inflation's been down since 2022, or it's been trending down, and now it's trending back up again. At least prices paid by producers. So, all that stuff ties into perception and how the market is looking at the data, right? Because a lot of the times the way market looks at data is forward looking. And what that means is even though you have a bad or good reading in the present terms, the market is interpreting it with respect to the future. So if you have a positive reading today and the previous reading was also positive and the market was expecting something negative, and that was what the occurrence was, that's going to really make the market flip really positively. Even though, if you understood the fundamental picture and nothing changed, kind of like Hex, it doesn't really make a difference. But people are just like that. They don't understand things. All right, so U.S. 30-year yield back below 4%, and we've been talking about this for weeks. It's just a continuation, right? And if we go back to the price and look at what it's doing today, I mean, it took off. We talked about this yesterday, and it broke out of that wedge. And that's why understanding the fundamental situation is imperative, right? Anybody else might have been short here, not understanding what made the most sense in terms of probability. Because when you're entering a wedge, it could go either way. You don't know. Somebody might be bored and they might feel like dumping their position. Who knows? Um, but this is the end result of capital flows. Treating that level up there as a magnet. That's just typically how it works. So we shall see how this move keeps on emitting pressure on everything else that we're seeing in the market to some degree, right? Because again, interest rates are the determinant of everything else. Because if you look, the whole curve is catching a little bit, right? So let's zoom out a little bit. 2 years still trending up. Fed funds futures still on its highs. 5-year futures trending up. Man, 10 years is going to be the same deal. So, and this market, right? Capital rotates, right? It cycles. So this market's been pumping since 30th of October. This market has been pumping since 20th of October. This market has been dumping since 2nd of November. So you guys are seeing the lag, right? This is the latter half of the people joining the party from the people that were already in cash. Capiche? They were already in cash. So now all these people are getting rid of their cash to join the party. That's why this keeps going up, that keeps going up. Right? So that's how it works. It's not instant. Not instant. It's very imperative that we understand that. Because that would really get you, at another level that of understanding, and that's what you want. You want to be at that other level of understanding where you understand, oh, all right, this is going to be a good move, because you understand in the capital flows. Because that's ultimately what it's about. Being able to assess a move according to what is actually happening in the market, right? Because the market is the answer, nothing else. So um, that's pretty much how it goes. Even with crude right now, right? What if this move in crude, this continued liquidation move, what if this begins to rotate back into the dollar, and then this begins a new bear trend for crude? Because we're still within this channel that's out here, right? That's outside of this wedge. So it's being aware of the market and sentiment and all of that, right? Because of course this could change at the drop of a dime, and price could be at 85 if something crazy happens. But you got to be aware of what's happening right now. And right now, that ain't what's happening. So that's why you got to be cognizant, right? And then looking at the picture even further, this is 233 minutes per candle. So we have a negative divergence presenting itself here on this time frame. So just not a good look. Probably gonna see 72s. And that's the way the cookie crumbles. Cotton is actually looking bullish if you look at this thing on a long-term basis. I mean, once this thing goes above 90, it's gone. You definitely want to be buying it down here because it's structurally bullish. I think this might have been a contract roll, but it's supposed to be showing me, but it's not. I don't know why it's not. But anyway, it's looking bullish. You got positive divergence here. I mean, it's so freaking, obvious. And this one moves really, really, like once it gets going. This is one of the first contracts I made big money in because I caught a big trend, and I had no idea what was going on. Of course, I was brand new, but that's how it goes. So you got a lot of things supporting this price to move up higher. The huckleberry really is going to be getting above this 90 level because it's been holding price in this range for over a year. So I don't know what the fundamental story is right now with cotton, to be honest. I'm going to look into it to find out because I am interested in that trade outright because it does look like a great trade. So the fundamental picture does line up, and this is not what it looks like from this vantage point. This is a weekly chart basically, and this is 8 days per candle right here. So it looks structurally okay, but if that fundamental picture is lining up on the short term, right, then that long term picture is going to ultimately change as well. Because that's kind of how markets work. Is in and out, in and out, as far as the change of the waves go. And shout out to everybody in the chat. Appreciate you guys for joining. Sorry. Sorry about that, folks. Thanks, Addy. Appreciate that, man. Appreciate it. Just trying to add value how I can. Seems like there's a lot of craziness going on out there. So yeah, grazie. But again, shout out to everybody in the chat. Mm-mm-mm-mm. So yeah, look, I don't really like dabbling in shit coins. This is what I dabble in, and I'll explain the math. Maybe it'll make sense or whatever. When you're taking on a trade, you can either hold it overnight or not. Smart money holds it overnight. They're not trying to day trade. However, they're looking at their risk from a day-to-day basis. So if a position ever gets out of whack, right, they can cut it and maintain profitability, because in futures on a day-to-day basis, you are mark to market. It's not like stocks where you can have paper gains and paper losses. So now they are creating all these micro contracts. So what that means is that the risk you take isn't really crazy, right? Because like when I started, there wasn't no micros. You were finding fucking 10 G's and making it work, because there wasn't no day trade margins like that back then. Not that I remember. I definitely didn't know where they were when I started, and I was paying whatever it cost, the margin on the contract. But anyways, point is, now it's not like that. You can start with a whole lot less money, and you can make a whole lot of money. You come up to the table with 2,000, you can really take a nice slow trade that takes a few days to materialize, like a trade like this, 1,800 to 2,000. That's 200 points. That's 20 racks on the big boy contract. That's 2 racks on the small contract. And you didn't really have to do anything. But if you're just closing your mind to bootleg cryptos and taking such huge risks, is that really smart? I don't know. If you hit a jackpot, then of course you're gonna look smart. But I, on the other hand, prefer to not take those kinds of risks, because I already know how to read a chart. So why wouldn't I take a position like that? Right. So these are the kinds of things you guys got to think about, because you have to educate yourself. Right. There's so many different ways to skin a cat. Do not close yourself off to potentially losing your money, because that is what is most likely to happen once you step outside the RH ecosystem. So you got to be very careful, because if you don't have a process to verify whether a contract is good or not, you're going to get stung, and you don't want to get stung with that. It's not fun. So you got to really have that, and what is called Smash. You got to have that on Smash. Because at the end of the day, you don't want to be biting the dust. You ultimately want to be in the winner's lane. And that's ultimately up to you to make that happen. Nobody can make that shit happen for you. So you got to ultimately do what you got to do. Don't be a talker, be a doer. Don't be a thinker, be a doer. Be a planner. You know, make small steps to attain big goals. These are the kinds of things you got to think about doing, because every day is a new day. So you get to start every new day to tackle whatever problem you want, regardless. Whether you're employed or not, it's up to you to find time to accomplish your goals, because you got to survive. So you really can't use that as an excuse. I mean, it sounds good. Like, I get it. I used to think like that, but that's just not gonna cut it, folks. We gotta do better. We gotta want more. And that's just what it boils down to. So, don't be shy. Understand that there's a lot to do, right, in order to achieve success. And if you want to achieve it financially, you can, execute multiple strategies, right? And that's my point. What do you mean exactly by this? Because this is kind of a loaded question. Market makers, I mean, it depends. It's like more of an inventory thing. Because in futures, it's a little unique. It's not like stocks where a market maker is the broker. Futures, producer could be the market maker. It just depends the product and what's going on exactly. Because the way futures work is that a contract only exists if two parties enter it. So there isn't necessarily an inventory of contracts for corn or for the S&P E-mini or anything like that. There's no inventory. Um, does that make sense? That's why I'm like, what do you mean by market makers? Because like what the way it works in terms of technology is that you get direct market access if you pay for a data feed. The brokers are really just there to facilitate, money movement. They're not really doing shit else. That when you have a self-directed account, they're not really involved. I mean, if they facilitating other, transactions and shit like that, like they're not supposed to be. So, you gotta be careful with stuff like that. You gotta really understand what these people are doing, because you can't be getting scammed out here. So you gotta be aware of that. Because that's definitely a thing. Definitely a thing. Yeah. So I hope that makes sense. If it doesn't, let me know. And if you're asking about stocks, that's a whole nother conversation. Because then we would have to look at if, first of all, what the float looks like. Second of all, um, are there big short positions? Yes or no. If yes, then how big? Because then that would matter relative to the actual amount of shares that are floating around. Because the weird thing about stocks is you got your floating and then you got the actual quantity of shares that exist. The actual quantity of shares, it's cool to know that they're there, but they're not the batch that matters so much, because that's not the market. The market is, the floating amount. So if there's a percentage of the float that's huge, well, we got to know. And right now, as you guys can see on my screen, the market's going bananas. It's attacking those highs at the end of the day. And I'm pissed because I just closed out my fucking position 7 points ago. But that's the way the cookie crumbles. So what is it going to do, basically? Typically over here it's just cut out every time. But the fact that it's attacking it on the third time, and I didn't even think about it because I was yapping to y'all. It's probably going to keep going. So let's give ourselves a 55-minute view. We have a nice little indentation, a little increase here in the non-GN channels, which is the whole point of them for how I like to look at them, on such a long term duration. Because now what it's going to show me is this move real or not, right? I'm understanding that 34, 35s is new highs, but is it enough? Just because we're at new highs doesn't mean that it's enough. And that's something that took me a long time to understand. So, if it stays up here, it might mean something, right? But the market is ultimately going to determine, what happens. And these types of candles you're looking at right now, they're range candles. And what they mean is for every 5 ticks, it prints a bar. So these aren't like time-based candles. So if you see at the time at the bottom of the screen, it says 1550 with 50 seconds. So that's like 350 with 50 seconds Eastern Standard Time. So that was about 10, 12 minutes ago. The market was trading at 1950, whatever it was, 2050. And it just ran in those last 10 minutes. Boom. 15 points. Just like that. And that's how it works. That's why I also use these range candles to see if the market is really moving or not. Because that's really what you want to know. You don't really give a rat's ass, about anything else. Because the whole objective is to find volatility and exploit it. If you can't do that, then you can't do much. Because that's the whole point of trading. That's the whole point of allocating capital, is to extract value, right? So that's ultimately the whole point of doing all this funky dunky stuff, right? Like the market did it earlier where it popped up. I mean, literally did almost the same pattern 2 times a day. It consolidated higher, moved lower. Consolidated here, moved higher. Consolidated here, moved lower. Consolidated here, moved lower. I said lower here, but I meant higher. But you guys kind of see, like, that's just what markets do. They move, consolidate, move, consolidate, move. So now you look for the next consolidation and try to determine which way it's going to go. And that's really the way you do it. If you're going to be day in, day out and all of that. But you got to have a bias. You got to let the market tell you where it's going to go, right? Because the market typically picks a direction. You don't want to be swimming against the current. Imagine all the people that were freaking shorting the hell out of the market here, thinking that was it, freaking 4 hours ago, 2, 3 hours ago, and look at the market now, 15 points higher. And, you just don't want to find yourself in those kind of positions. So you got to be thoughtful about how you move. This is all the same, all the same. Because if you're buying crap crypto, right, especially when there's not, I don't know what happened, but they deleted 2,000 of the motherfuckers. Because there was definitely 9,600 cryptos 2 days ago. Whenever I said it, I don't remember, it must have been like 2 days ago. There was definitely 9,600 of them joints here. 9,600. What the fuck? Like, really? But still, 75,000 or 7,500. Like, that's what we're doing. I mean, it's crazy. Because then once you start sorting through liquidity, right? I mean, I sent out a tweet about this shit a while back. What is it? 40 coins, 41 coins got 100,000 liquidity or more. That's it. That's your market. Because you fuck around with anything less than that, you're really taking on risk. You don't really know what's going on there. Because that shit is fleeting at that point. And I'm not analyzing it on a brand new this, brand new that. I'm not doing all that. Right? I'm just looking at it from a liquidity basis. That's all. Because the idea is the deeper the liquidity, the stickier the market. Meaning it ain't gonna disappear on you. And that's what you want. You want that guarantee when you're looking at cryptos. That's ultimately all it is. It's not more than that. Because if there's one thing that was common in 2017, 2018, it was you just, everything was on these websites. And these websites would just disappear. So, yeah. You don't want your money to just disappear. That's kind of the point. Something to think about. And that's why, I'm such a fan of trading in centralized markets. Because if you want to make money, there's opportunities to make money here. You don't got to be sweating it. You just got to be methodical and patient. Like, you could have been trading this US dollar. I mean, this thing has been a cakewalk. It's $1,000 per point, which is really whack, but it's an easy trade. Uh, I just don't think it's good bang for buck as far as what all the other markets that are out there, which is why I don't trade it personally. Um, and this thing is just it hit it. Look, in one day it hit that freaking level. So, we'll see what happens from here. If it keeps going, well, you know what that means. This thing is going to keep going. These markets are going to continue ripping because they're related, right? If people are shedding safety, and that meaning US dollars, well, you know, they're going to be buying stuff with it. That's typically what that means. And is there anything from other currencies, right? Which is why the Australian dollar, pound, Canadian dollar, euro, yen, all these other currencies are up. New Zealand dollar. This is the scary one. 'Cause this one's up mega huge, as Trump would say. It's up 147 pips. I'm mad I wasn't paying attention to it. I definitely would have slung that bit. It's up 1%, 1.25%. It's probably, yeah, it's up there with bonds. So something's up, and nobody's really aware, right? Equity markets are unaware. Coffee's up 1.75%. Oats are up. Okay, no, that's an easy, nice trade if oats get going. Let's take a look at oats. That was one of my first trades, man. I had no fucking clue what I was doing. Good times. Good times. Yeah, looks like it's setting up for a nice long move. If it can get above these moving averages, yep. But it's in closing on one. It's building bullish structure if it could get above them certain levels. And I mean, today's open was really constructive. So stuff like that is important to understand. Like where markets open like that and separate, that means it's going to be a strong day. And it's so much so that this market on this day, the one that I have the crosshair on, it got sold off, but still ended up the day closed because it opened with that gap. The previous open, same deal, opened with a gap, got bought the hell up. And the following day, not much of a gap. So the market eventually weakened out. But today we have a gap again. So things to be aware of, stuff like that. And on these down days, you had a gap, no gap that day. So then it turned into a reversal. So it's stuff like that. Like it's not obvious, but if you look, at these things long enough, you pick them up because they don't just happen. They happen for a reason. Let's see if we can pick up something like that in equities. Some markets is more obvious than others. Equities are so flow driven that it's hard to see that, but like here, you can see it. That's why I have that box there. But that box came from like deep in the weeds analysis that I was doing on the chart because I just saw it on the chart on a smaller time frame. But that's what you see here, that gap. If I pull up a range chart, you're gonna see it. Gap. See? So markets do what they do and they don't hide their intent. Are you paying attention? That's ultimately the question. Um and that's pretty much how that cookie crumbles. I think we got lost here. The 30 year. The 30 year, it determines everything. So that's why that went left like that. Or we started talking about all that other stuff. Yeah. Good. I get it. The whole technology and all that, blah blah blah. I get it. It's just not there yet. Like, like they trying to control people with technology right now. The cars of value are the cars that are analog, not the cars that can be turned on and off from some office. So something to think about. Banks terminate 60,000 workers in one of the bleakest years for the industry since 2008. Now, of course, this is all on the back of what happened in the beginning of the year, right? With Wells Fargo shit in the bed, UBS buying Credit Suisse, All those retail banks closing down. Well, I guess they weren't really retail, but they were small banks. Um, and that was kind of the precursor to the previous crisis. One thing I'll tell you guys, you got to watch what these regulators are doing. They always show their hand some way or another. And right now, I showed you guys the other day how the FDIC put out this memorandum. That memorandum is them CYA. That's what that is. It's them saying, hey, we let these clowns know that they need to be paying attention to credit real estate or commercial real estate because we already know it's a problem. But what are you going to do about it? So these are the kinds of things you guys got to be aware of. They let you know, but are you paying attention? Like always. So those are the things that, you know, they're not hiding at all. Hold on, guys. Anyways. So yeah, this usually is a precursor to other industries suffering significant losses. But in terms of jobs, um, but the thing is that we already know this is what's been happening all year because all you hear about is job losses. I mean, they're happening all over. It's crazy. So, if you're an employee anywhere, make sure you're a sticky person. Make sure that they can't fire you. Because that's really the only way to ensure your survival through any of this kind of crazy shit. Britain's net zero disaster and wind power scam lines up with the EV headline, doesn't it? I mean, we all know this ESG DEI crap is all trash, right? So the market is proving it out. And I remember, I remember one of the first jobs I had. They were pushing this crap back then. This was like 2015, 2016. And I would make the point, like, this is dumb because it doesn't make money. And this was back in the day. I didn't know anything, relatively speaking. But this was obvious. I don't think you need to be a fucking genius to figure this out. And the narrative was, well, we can make money and still try to do good. Sure. Hope they are losing clients left and right for being fucking stupid. Motherfucking morons. I mean, you got to think about how dumb it is. Let's attempt to force the world to reconfigure itself such that it cannot. So these are the things you guys got to think about. How do you determine what makes sense to you? You got to make things make sense. That's how you find that line that gets you paid, right? That yen's trending up. I mean, at the end of the day, euro's trending up. End of the day, I think the S&P already pumped all it's gonna pump. Crude, what is it doing until the end of the day? Selling off. Gold, it pumped early. Metals look like they just pumped early. Heating oil, selling off. Natural gas, selling off. Gasoline, probably doing the same. Yep. And silver probably doing a lot of nothing because it pumped early. Yep. So we got a pretty solid read on the market. Volatility is probably getting crushed. Let's look at the VIX. Yep. Just getting sold down. It popped up a couple of weeks back because of all the narratives surrounding why interest rates are moving lower. Because as we can see, interest rates are way lower, right? And the VIX is back down. So that's what's going on, folks. Might do another one tomorrow. We'll see. Thank you guys for tuning in. Not really much else to say. You guys already know the crypto deal. Be safe. Wrap it up. Don't play yourself. Important things to do. Yeah, be easy. Peace. Right? The reality is that I want to be rich as fuck. There's only one way to be rich as fuck. That's by sitting on your ass the longest.
Yep.
That's it.
Yep.
That's the secret. The guy well told you. Richard done told you. I done told you. Kareem done told you. Maddie done told you. Everybody done told you. Everybody done told you. These motherfuckers still acting like they don't know. Appreciate that.
Yeah.
I appreciate
Trust
that.
us. 100% safe. There's plenty of games left.
Valiant done told you. Yo, everybody said it. I mean, hey, you know what it is, man? Everybody done told you. Y'all's deep.